thank you so much for joining today. Today I would like to give you an idea how a typical fund structure, hedge fund structure, private equity structure, any other alternative investment fund structure works. It's usually organized as a limited partnership structure. That's why I've called it typical fund or partnership structure, because the setup is usually identical whether you talk about large investment funds. So what is happening? You have one fund manager. Fund manager, that's an organization who is basically managing the fund, coordinating, administrating the fund, which is also called general partner. General partner, GP. Then, apart from the general partner, you have outside investors. Outside investors. They are called limited partners, LP, because they have limited liability and only as per their investment. So let's assume you have an investment fund. Let's say 100 million. Then potentially the general manager, they put some money in, maybe 10 million. And then what is happening? All those outside investors, they put money in as well. And they can be many investors. One can put in 10, the other one could put in 50, the other one could put in 60, could put in 80, another one could put in way too much. We said the fund is only 100 million, so maybe one is putting in 30, 40, 5, and so on. 15 here. How much? 70. Like this. Yeah. So you have different limited partners, outside investors who basically hold a fractional interest in the fund. They provide money. Usually, my example is not good. Usually the general partner, they put also some money in as a commitment to show, hey, we are in this together. But usually the amount is way smaller than the limited partners. Here, my example, it's not 100% accurate, but I think you get it. The general partner is responsible for everything. If there's a lawsuit, if they borrow money and something happens, that's why the general partner has unlimited liability. Then the fund basically invests in different investments. Let's say investment one can be companies via shares, could be real estate investments, could be other alternative investments, so whatever. Investment 3. So the investment fund basically invests in those investments. And what is happening, just to clarify again, here we call it unlimited liability, and here those investors have limited liability. Yeah, and here we say the investors, they invest indirectly in those investments, because as you see, they don't invest directly. Otherwise we would call it direct investing or co-investing if they do it with someone else. Here, when we talk about investment funds, it's an indirect investment. How do they get paid? So because the fund manager, the general partner, is actually organizing the investment fund, they get paid via so-called management fees. and many times so-called performance fees. Performance fees are usually applicable when the fund achieves a return above a certain hurdle rate. Management fee, depending on whether it's a hedge fund or private equity investment, is either based on the committed capital, what was put in here, or the management fee is based on the assets under management. So it depends a bit on what type of investment fund you're looking at. From a limited partner perspective, they share in risk, depending on how much they put in, and also in returns. Yeah, after the fees to the general partners have been paid. Yeah, and as we said, they have limited liability. Here, whatever the investments provide back is basically your gross return. And then whatever after the fees, those returns are basically the net returns. Yeah, and everything together, how this is organized, especially the relationship between the general partners and the limited partners, it's organized under a so-called LPA, which is a limited partnership agreement. Yeah, so this is usually how it works. There are some other nuances, like the limited partnership agreement usually organize how the structure works, how the relationships works for all the investors. If certain investors need certain treatment or work in different jurisdictions, then there are so-called supplemental side letters that can override or modify some of the underlying terms. But I think that's all I wanted to explain. I will do some other videos to explain you more how the management fee, performance fee, and the return structure works. But for now, I hope you found this useful. Thank you so much for listening. Bye-bye.